How can you move out of the way of something you can't see? Isn't that an interesting thought? There are cycles in the markets, countless events in history, contrived events, and real ones too. Patterns are always forming and giving off indicators, but no matter how much is happening in the world, people are always distracted by the bread and circus, always divided and so easy to conquer. Those in control know just what to do, which is why they have largely remained in the shadows for hundreds or perhaps thousands of years. You came here for the truth, so let me unveil that for you. Today I have a mega jam-packed episode, so many different charts, articles, pieces of information that I need to get into. Ultimately, what I wanted to stress is that the average individual simply is unprepared for any future events. They don't understand history, they don't have the knowledge, and yet they have this attitude that this time is different. Well, these people here have what's known as normalcy bias. Anytime there's a change, they're going to fight for their beliefs. They're never going to be able to cope with what's happening. And as it happens, as it gets worse, they're going to find excuses. Any excuse to cling on to, and they will simply hang on for dear life. Let's get into the video, beginning with the markets. The markets reacted very positively. You can see that the Dow Jones was up 300 points on the day. The markets are at all-time record highs, and you can see that this has been because of all of the optimism. We'll get into some of that optimism today. I just wanted to make clear exactly what's happening right now. We're going to look at financial aspects, economic aspects, everything in between. Here you can see the difference in between gold, the 30-year Dow Jones, and the US dollar ever since Powell made his statement, the FOMC meeting. Look at gold actually outperforming the rest. This is such a short-term time frame, but of course it gives you an idea of how these markets have reacted to that information. When we see that central banks are going to print, the market reacts in a way in which is relatively able to be understood. Gold has gone up for a particular reason. Whether that will continue into the next few weeks and months will remain to be seen. This is my favorite chart. It compares the S&P 500 to what's happening with the global money supply in US dollars. You could see that this is at 76 trillion at this point. And as I have shown you so many times before, these two are highly correlated. This chart only goes back a short time, but we see this constantly going on over the years. They move in lockstep. Now there are variances along the way, but for the most part they move together. During 2018, we saw the global monetary supply flattening out and the markets went down as a result. They need a constant expansion of the money supply, of the deficits, of the amount of debt that these countries, these corporations, and the individuals hold, or the entire system collapses. The great majority of people within the financial system believe that this can persist, but of course any nation who has tried this historically has failed. This time is not different. Now, the jobs numbers were absolutely fantastic. Okay, so they weren't very good, but the expectations were worse, therefore it's great. That's the mindset that we have entered. Here's where the jobs are in one chart. I'm going to show you that in just a second. The numbers are here on the screen, and you can see that they were 128,000 jobs being added, and that bet the estimates of 75,000. So therefore, everything is great. This is the chart. October jobs, 1 month, net change. At the top of the list, leisure and hospitality. Under that, healthcare and social assistance. At the very bottom, manufacturing declining significantly. Restaurant jobs has been one of the biggest factors in this particular report. Of course, underneath that, the healthcare section, I showed you in a previous video how the average person is making, I believe the number was 24,000 or 28,000 on average. And those are the jobs that are very, very common. So a large bulk of that is coming from lower wage workers. October's ISM manufacturing index is 48.3, a worse than expected contraction. But of course, in this case, the market completely ignored it. Remember that anywhere below 50 is considered to be a contraction. I've been showing you these. I've been showing you the PMIs, which I'll get to in a moment. I'm going to show you the charts that correspond to this. Understand that it's important to follow what's happening in the manufacturing, not just in the United States, but all over the world, because that gives you some insight as to what's happening on the ground level. The consumers are always the last ones to find out. If we're looking at the consumer to give us an idea of what's happening, how we're progressing, we're looking in the wrong area. A gauge of U.S. manufacturing trailed estimates for October and signaled the sector contracted for a third straight month with the weakest production levels since the last recession. Understand how many different indicators are back into that territory, except if I show you what's happening in the S&P 500, we're going to get a completely different picture. Now here you can look at the PMIs. If you can see the chart on the right hand side, it might be a little bit small, but at least you can see right here, I'll draw it for you, that this is actually coming up from a level that was just sitting on top of that 50 line. We have seen these patterns forming before, of course, so we don't know where it will end up, but at least in the short term, we have seen the PMI in the United States coming upwards slightly. Now these two don't correspond. The PMI and the ISM are showing us different data. However, we'll see where the trend is in the coming months. Here are the two plotted on this particular chart. The market PMI is the blue line and the ISM is the green line, and you can see the difference in between the two. But ultimately, over a longer period from 2018 into 2019, you could see here that this has been declining. Here's another chart showing you the U.S. manufacturing employment month over month. It is absolutely terrible right now over the past couple months. These are well-paying jobs. These are the middle-class jobs. These are the ones that people get in order to build that strong middle class, and that is clearly not happening right now. Instead, they are getting restaurant jobs, they're getting Uber, and so on. Just to give you an update here, the red line is the total negative yielding debt worldwide, and this had moved down significantly from its peak. It was at approximately $17 trillion. It is currently sitting at approximately $13.5 trillion. So there has been some major fluctuations over the last little while. I want to see where this goes. I do believe over a longer period of time, this number will continue to increase as the financial system collapses. The yield curve inversion is perhaps the best indicator of a recession because it has a 100% perfect track record of documenting that. This is the 3-month, 10-year, and you can see the steepening. So basically what happens is that we have the inversion, and then after a period of time, it starts to go in the other direction. And you can see that happening already. However, this can certainly turn the other way. Ultimately, it looks like it will continue, but of course I will track it here, and I'm sure you will see it in the news if anything major changes. This is truly unbelievable, and it tells you how people have goldfish memories and how much they love to take risk. This shows you the amount of people that are shorting the VIX. Now, if you remember back in January 2018, when we had the absolute peak of the global stock markets, okay? So right now, even as of today, the global stock markets peaked out in January of 2018, and you could see on this chart right here at this moment, there had never been this many people shorting the VIX. And in a very short period of time, we had a lot of people changing their mind, okay? So that's what occurred. Stock market plummeted from there. Globally, everything started to go crazy. And 2018 was a very bad year. 93% of all assets were in the red. Then central banks, like the Federal Reserve, committed to completely destroying their currencies. And here we are today. And then we get this bit of information constantly. It's constantly coming out, and it's getting annoying. It is ridiculous when I see this. White House advisor Kudlow sees optimism over China trade deal. This makes the market go higher, not significantly, but it always gives it a little bit of a boost. It's temporary, but they have 1 or 2 people on a daily basis putting out some information there, even though it is not a fact. We did have China's side come out and suggest that they've made great progress over a few phone calls, suggesting that things are going somewhere, but we never have anything substantial. All they have agreed to right now is agricultural purchases. They use the number 50 billion, which sounds fantastic, and then you hear the admissions that it's going to take some time to get to that number. Many have suggested that the US can't even possibly provide that much. We'll see what happens, but ultimately the market loves the positivity. And this is a true sign of failure. Nearly 40% of 2019 farm income will come from federal aid and insurance. Think about that for a second. This entire industry, 40% of it is coming from the government or insurance. They can't even sustain themselves without the government there to support them. What does that tell you? This should be sending off a warning signal, but unfortunately for most people, they are fast asleep. And a little bit of humor for you before we finish off this video. I got a few more things to cover. This is directly from the Treasury's website. You can see towards the middle of the page, total public debt outstanding is $23 trillion. Nobody cares. The Federal Reserve doesn't care, that's for sure. I'll tell you right now what's going to happen. This number, 23 trillion, is going to be surpassed yet again. We will see them continuously adding more to the debt, more to the deficits. Nobody cares. Even though we can see that the interest payments on this debt continue to go higher and higher. The interest rate right now is extremely low, and yet the amount they have to pay continues to increase. They have to bring this interest rate down just to be able to afford it. It's getting to a point where all of the taxes that everybody is paying will go to the interest payments on the national debt. That's where your tax money is going. It's not going to fix the roads. It's not going to infrastructure. At least from what I've read, 7% of your tax dollars go to the things that people talk about why they should be paying taxes. It's an embarrassment. They're lying to your face. And here is the information that you need to know. The Federal Reserve, without your permission, right now, in one day, adds $100 billion to the markets. This is what they do with your currency, without your permission, without your vote. They actively manipulate it, and nobody knows what the value will be tomorrow. Nobody knows what's going to happen to you and your livelihood, your job, to your employer, to your business, all because there's an elite group of people controlling all this, and they are mad scientists. John Lennon talked about this, didn't end up so well for him. And to finish off the video, you had Barneys. I've already brought this up previously when I talked about it. This is a company that was a mainstay, that had a reputation, and here they are in bankruptcy. So there's been so many like this. I just did a video yesterday. 9,000 stores are closing in the United States. Very few people watched it, and the way that this works is that people do not care as long as their 7 shares of Amazon are going up. Truly unfortunate the way that people look at information today. Always short term, always short sighted. It seems like there's enough bread and circus for everyone. That's all for this video. If you found it informative, hit that like button. You support me by clicking one button. Thank you very much. If you want to build a business, if you want to learn about online businesses, if you want to make money, this course is for you. It's 100% free. There are courses out there like the Amazing Selling Machine. It's going for $5,000. There are others out there for $1,000. My course is $0. You could sign up, no catch. Check it out, theamazongps.com. If you want to learn about history, if you want to learn about financial education, these are the 2 books you have to read. Everything is broken down so simply, no jargon, no BS. Check them out at the link in the description. If you want the audiobook, that's at themoneygps.com. Have you seen this video yet? It's so important and not enough people have watched it. You definitely want to. Click on it and I will see you there.